Good evening, TradeFlare family. Welcome to the weekly watch list where we break down what happened last week in the stock market as well as give you an idea of what we're looking at into tomorrow. So let's head over to the key points this week, and the first key point is the good economic data that we saw last week. We saw a good Case-Shiller home price index as well as a good initial jobless claims as well as a Chicago PMI that beat expectations. On the other hand, we still missed on consumer confidence, new home sales, and pending home sales. Overall, there was a lack of sellers to take this anyway, which gives me the idea that the bulls are in control. The only bear case I can think of is the fact that there was low volume last week. Another key point is the PCE data that we got last week, and this kind of gives us an idea of what the Fed is thinking about inflation. The popular way to track inflation is using the CPI, but the Fed actually uses the PCE index, which measures the change in goods and services consumed by all households and nonprofit institutions, while the CPI measures the change in out-of-pocket expenditures on all urban households. PCE expectations last week were actually really close to the result. I think this is bullish, but I'm still watching the bonds to see how everything's going to react. Next, let's look at some SPY levels that we can gauge into the upcoming week. So looking at the daily and looking at last week, we broke above and pretty much held and tested above that 418. That was the top of the range we've been talking about, the 418 to 410.50 range. That has been the center where most of the volume has been for the past few months. For you new traders, we like to call this the area of value. And last week we spent some time above the area of value and we held above, and we saw some price acceptance above the area of value at 418. And this is more bullish than it is bearish in my opinion. So gauging the bull scenario, I'm looking at the 420.73 as a resistance level. If we can break above that and break above Friday's high, we could go test all-time highs at 423.59. If we do see some consolidation and low volume type of week, I'm looking at the top of that range at 418 as a support level. If we do see some selling and break through that 418, I'd expect some support at 416.50, and if that gives up, I'd be targeting the bottom of the range at 410.50. This would be a look above and fail, and when we look above and fail, we usually target the bottom of the range. Next up on the weekly watch list, we have Apple, and Apple is at a interesting point here. This is a cash heavy, growth heavy tech name, and this thing is not done. It's looking like it's forming a huge ascending triangle. If it respects this support trend line, then I'm going to be looking for long calls with expiration dates later than July. On Monday, if there are any day trading opportunities off of that support trend line here, I'm looking at the June 18th 130 calls. Next up is AMD, and AMD had a really nice day on Friday, and after hours it looks like it's forming a nice little bull flag after breaking out of this cup and handle on Friday. We are definitely seeing the demand here from the bottom again. This is definitely one to be watching for the next coming week for swing trades and day trades. Next on the list is Qualcomm, and Qualcomm sitting right in the middle of a range here. Qualcomm's last earnings were actually really impressive, and they really started to show an actual gross profit margin. Another thing that's really attractive is their PEG ratio, or their price to earnings to growth ratio. This compares their price to earnings ratio to their 5-year projected earnings growth. Having a price to earnings to growth ratio less than 1 is really attractive to value investors like myself. This price to earnings to growth ratio doesn't even factor in the 2% dividend that they pay. I'm actually looking to add more to my long-term position at these prices for Qualcomm. On the technical side of things, I'm really looking at this thing to break out and test the top of a range at $143.30. In a bear case, we're actually looking to accumulate around $124.30. As far as trading goes, we'll be playing the ball as it lies, looking for a break above 135 tomorrow. Next up is Citibank, or ticker symbol C, and this stock, along with the rest of the financial sector, is trending. We have good PMIs, good PCEs, and this is overall going to help the banks. Looking at this channel here, it's possible that we could go and test these highs, this high resistance here around $86, $87. This thing has ran up, but if you look at its price to earnings to growth, this thing is still undervalued. I'm definitely more bullish than I am bearish in this case. I'm thinking that the financial sector could take us back to all-time highs, combine it with a tech breakout, and we'll see new all-time highs. That's why we're watching techs and financials very closely this week. Next up is Nvidia, and if you're going to want to play Nvidia, you're going to have to pay a premium. The 4-to-1 split is definitely bullish, but these options are already pricing it in. I like the split because it means more liquidity. Owning more shares of Nvidia would be great, but the time to buy them was a while ago. This thing is breaking out as we speak, so watch it. Next up is Airbnb. It looks like we're getting real demand and volume from the bottom. Last week we broke the downtrend that we were seeing. This week we're looking to play the continuation. I think Airbnb is an inflation winner, so watch Airbnb, watch DFS or Discover Financial. They are not overvalued and they're flagging on the daily here. Watch Square. I think they got slowed down by low volume, and I think that there's going to be some nice positioning before the next earnings because the last earnings was so good. Next up is Allstate, and this is another valuable company in the financial sector. They are also forming a bullish pennant, so watch this to break out. Watching STX or Seagate Technology, looking for this to break out of this pattern here. Watching PLNHF. I'm actually looking to get shares of this for a little YOLO play for cannabis, and I like this one because 9% of all Nevada cannabis dispensary revenue in Q1 was from Planet 13. They actually had a gross profit margin at 51%, and I actually like to look for consistent gross profit margins above 40%. And I think there could be some hype getting into this one before the next earnings, so I'm watching this one very closely, especially as the meme stocks are popping, and this could spill over into these weed or cannabis stocks. Next up, I'm watching Ford, and this is just a continuation play off of last week's crazy week. I don't expect volume to just leave the stock right away, so expect this thing to keep moving into the coming week. And that wraps up this weekly watch list, and if you got value out of this video, make sure you hit the like button and subscribe so you don't miss out on any future videos that we make. And if you're new to the stock market and you're looking for a family of investors where you can learn day by day how to invest for your future, check out the link in the description to our Discord and upgrade to TradeFlare Pro so you can get the best educational experience, as well as plenty of other resources including trade signals and a community of well-rounded traders. And as always, we are not financial advisors, and nor do we claim to be, and the stock market is risky. You could lose money, so use the information in this video at your sole discretion. And remember, time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.